Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some data. And so here, this is pre-market prep for Tuesday, February 25th. Recording this before I head to work, so it'll be a little short. But yeah, I just wanted to go over the usual charts. Does seem like it's a pretty exciting week in the market, not only in the stock market, but also in Bitcoin. Did want to go over this especially. And then also, I did want to go over SoundHound AI. Have gone over this the past couple of weeks, and yeah, there were some pretty interesting signals in the options data. I did want to go over, and yeah, I think that's something that's going to be very interesting to look forward to in today when today's, or I guess I should say yesterday's data is released. But first, I am, as always, going to start with the UVIX. This is the 2x long VIX futures ETF, which closed yesterday at a price of $30.37, being up about 0.86% on the day, and the high for yesterday was $31.83. So a pretty nice move there. And if we do zoom in here, we can see that the wick high for the day did pierce the 50-day moving, the 50-day moving average at 31.51. You can see that number right over there, and it did kind of follow, this white little arrow doodle that I have there. Although it did not dip down to 25, the lowest we got was 25.85. But, this has been a really nice play for me. I had picked up, really just a couple shares, so a very small position down here between 27 and 26. And I did swing that yesterday for a 20% profit, so nothing too crazy, but just kind of looking back at this green box here, seeing that they're with these two spikes in that range there that, I didn't want to be greedy and waiting for this to go higher, waiting for this to get up to, the lines up here around $40. And so, what I did is I, took that profit at 20%, and I will buy back if it does dip lower. And also, just looking at the volume price analysis, what we can see on Friday is that we had this very nice big green move in that candle going up almost 14% on the day, corresponding with a nice spike in volume there. But what we saw yesterday, so on Monday, the 24th, we saw the price go higher. So looking pretty good there, but the move to the upside was only 0.86%. Even though we did close higher, we did get higher, but the volume came down. So that kind of divergence there makes me think that this is a little bit of a weak move and we could be seeing a pullback. So I am ready for that. Although if we do look over at the pre-market, it is up about $1, trading right around $31.33. If I do flip over to the 10-minute time frame, we can see that it is floating higher. However, it is not really, higher than the high that we hit during market hours yesterday, which again was $31.83. So we will have to see, does this continue up? Do we see a gap up? And, potentially a violent move to around $40 a share here, marked by this blue line, as well as this purple downtrend that we can see from over here. Or maybe we stop out at, the high that we hit here on, let's see, February 3rd, which was at a price of no way. Okay, yeah, it wasn't giving me the right data. $35.78. Sometimes it gives me the most recent candles data, which is, kind of annoying because it does throw me off sometimes. But yeah, 35.78. So maybe 35.36 does act as a top. But if we can break above that, I think it's definitely going to 40. But like I said, I do suspect it'll be something like this. Just like here, we got rejected from that 50-day moving average. That could be happening again. Maybe we see a pullback over the rest of the week, and then next week we see a move to above that 50-day moving average. So that is what I would be looking for, looking to buy any dips and, just sit on my hands for now because I am no longer in a position here. But then flipping over to the VIX, we could see, I thought this was really cool that, I believe I suggested it in yesterday's pre-market prep, pointing out this light blue uptrending line that was support over here before we broke below it and then kind of danced around it over here. That served as a very nice level because we did top out hitting a high on the 24th of $20.24. My alert over here at $20 did go off, but at that level, we were bumping into this trend line that had acted as resistance. And just like I had doodled out in the UVIX, the VIX, which by the way I should mention is the market volatility index, which closed yesterday just below $19 a share, being up about 4.2% on the day. But just like I have drawn in this doodle, I was kind of thinking it would be getting to that uptrend, but maybe testing 1485 before doing so. We didn't see that pullback. We just saw a direct test of that uptrend. And so now, what I would look for is a potential pullback, or at least if it does go higher, I personally am not looking to chase any of this stuff. Just kind of sitting on my hands here while we see things play out. And then switching over to the 10-minute time frame again here. We did get up to just about that light blue line. Looking at the 10-minute time frame, almost there, but looking at it on the daily, we did pierce it. We do have a lot of levels that we could be testing to the downside. So, this is putting in a lower high. So maybe this is consolidating before breakout. I can just do a little bit of a doodle here like that, and then maybe from over here, maybe we're forming kind of a wedge that we might be breaking out of, but at the same time, this is a fairly short time frame. But looking over here, we did break out from that. Maybe we do the same thing over here, or maybe this is a fake out. But we'll have to see what happens over the course of the day. It will certainly be another interesting and exciting one. But anyways, moving on, let's check over with the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $597.21, being down about 0.5% on the day, but continuing down to around $595 in the pre-market. And so kind of what I thought we might be seeing was, maybe a rebound, a reclaim of these levels. But in fact, we have not seen that. We actually got a close lower than Friday's close. So this does look fairly weak. But, thinking about this volume price analysis, I'm not the best at it to the downside, but we can kind of think about it in the same way. And I find inverting charts can be a nice way to see, maybe that's a cup and handle. Maybe that's something I can show with, I believe, Tesla. It's making an inverted cup and handle, so that would be a bearish pattern. But so looking at this, volume price analysis here, this would be contrary to what I was just saying if Tesla is an influence on the S&P 500, but we see this big red candle coming down, and that came down almost 2% on Friday the 21st, and with that big red candle we see volume going up with it, so that is supporting the move. Volume is behind that move. But then what did we see yesterday on the 24th? We saw a continuation lower, a lower low, another red candle, although smaller range, coming down about 0.5%. But with that getting to a new low, we saw the volume decrease. So that kind of makes me think that, these moves are slowing down. Volume's not as behind it. There are fewer sellers down here, but there's also fewer buyers. So what we, need to see is potentially a bounce. And so I still do think that we will be hitting new all-time highs, but we could be fading lower. We did close below that 50-day moving average at 500 $98.71. You can see that number right there, as well as up here, but this one does change as the cursor changes, depending on the candle that it's over. But yeah, just looking at this, the level that stands out to me that's next on the line, that's next on the list, is going to be this 50% retracement right around $593 based on this retracement over here. Next would then, of course, be the 618, but I might as well add to this the 786, which could very nicely correspond with a retest of this yellow downtrend. That would be around $583, right around there. And of course, between that, we do have, between the 50% and 786, we do have a 618 that is around $589. So those are all levels that we could be retesting, and I don't think that they'd necessarily be that bad as long as we hold above this yellow downtrend. And so really worst case scenario, I think, would be that we get to around $583 a share. And yeah, I mean, and then we would still be trading within this light blue parallel channel and coming down, I guess, really worst case scenario, maybe coming down to around $575 a share, and that might actually coincide with the 200-day moving average getting up there as price does fall. So yeah, I mean, from where we're currently at, we could be looking at a potential 3.5% move to the downside, but it's not going to be a straight line. So I think that we might be getting a bounce. Maybe if we do come down to 593, maybe we do something like this and then get rejected from there, and then attempt to get back up there but don't, and then something like that, maybe, and then we come back up here to test the new all-time highs. But yeah, I have no idea is basically what that means. But there are these levels to be keeping an eye on. If we do switch over to the 10-minute time frame, we can see that this is just putting in lower lows, kind of bouncing. We'll have to see where it opens up. Currently, the low in the pre-market is 595 to the cent. And on the penny, I don't know what the phrase is for that. But yeah, I mean, I would think that if it does bounce, it'd probably be getting rejected from around 600 or 602, which is that solid blue line there. So yeah, do keep that in mind. We could be heading lower, but that could represent some great dip buying opportunities. So do, pace yourself as I am doing. But anyways, looking over at the SPX, this is the S&P 500 that closed yesterday at a price of $5,983.25, being down exactly 0.5% on the day, very clearly breaking down here, just like what we saw in the SPY, but there's no volume for us to be considering here. And so, yeah, we did lose the 50-day moving average at $6,008.50. We could be heading lower, I guess, with this retracement. I'm just going to make this a little bit thicker. I don't have the, and actually, I'm not going to add it because I should adjust this retracement to get that all-time high in there. But I'm just not going to do that yet because I got to go to work soon. I don't want to be fussing around with this too much. But yeah, I mean, we do see what I think looks like could be, really a fake out breakdown. And I do still think that we will be bouncing to new all-time highs. But, are we going to continue down to, I guess I'll just throw it up here, that 50%, not getting too fussy with it. I do want to adjust that to over here. But yeah, I mean, that's going to be right around $5,951 or so. That could be a nice dip buy. And then over here, $5,909 about, coming down to really, lots of levels down here around 5,870, let's say, or 69. Let's have fun with it. But yeah, just flipping over real quick to look at the 10-minute time frame. It does look like the current 10-minute candle is dropping a lot. There's the cursor there. Yeah, so that's looking pretty bearish. And actually, this is 10 minutes, but this is the close from yesterday. A pretty red candle there, last 10 minutes of trading. And so, that could actually be just like, there's some panic. Maybe we gap down, but then, shake out those people going too short. Yeah, it's always going to be faking us out. So, do look for a bounce, but then maybe a continuation lower. We will have to see. And since I did mention Tesla, I did want to pull up, I'm addicted to this stuff over here, just exploring stuff I probably shouldn't be, especially when I have to be at work. But let's look at Tesla. So this is, potentially, maybe you could view this as a head and shoulders pattern. That's bearish. But yeah, I mean, maybe you neglect that over here. This to me looks like, it's a potential inverse cup and handle. And so, if I do draw, that line over here, one thing that we can do, and I believe actually I probably have this on the log scale, so maybe I want to adjust that to linear. Doesn't really matter. But if I just invert the scale, yeah, I mean, that looks like an inverse cup and handle. And so that would make me think that what we might be seeing is something like that with Tesla, which is ultimately bearish for the stock market. But maybe we don't see that and we see something more similar to, a rejection from that level, just kind of a mirror of what I just drew. And so that could potentially be a suggestion that we are near the bottom. If we do get a bounce here, and if I do invert that scale again, so those are the two options over there. And then, yeah, coming back to this, let's look at Bitcoin. This one's pretty exciting. I didn't make enough time for myself to really dive into this, but we have seen, a very clear breakdown from this white trend line that we had been trading around for, the past few weeks. We did break below not only this red uptrend, which has served as an indicator for forming higher lows. Now, we did also break below the 786, which is around $93.5 thousand based on this retracement here. The low from around January 13th in Webull, the closes are a little bit wonky, so maybe that's off. But yeah, right around January 13th up to the high on January 20th. And then also this level that has served as notable support around $92,600. This purple line here definitely been a great dip buying level for trading this range here, but we broke below that as well. And one thing that we're getting to, and I have to say, disclosure for myself, I had dip buys placed, very small $10 buys, so nothing too crazy. Ranging from 94,000 down to 91,000, and then thinking, well, if we're going to be breaking down below that, below 92,000, I don't really know where it's going to settle out at. And I was actually thinking 86,000. I don't have any more. Actually, I do have a buy order placed at 86,000. Just placed it before making this video, thinking that, with this Fibonacci retracement going from the lows of August up to the highs of December, I guess I could adjust that to this newer all-time high over here, but it's all approximate. Just thinking about that 382 from that retracement, that's around 86, thinking, well, that could be the next dip buy level. But then I was thinking, well, actually it could potentially be this yellow downtrend. We are currently trading below that. That would be a price right around $89,000. But we haven't really closed, for the day. We are trading below that level at 88,000. We did hit a low of 86.8 thousand. And maybe that's just like a tease of this level that I've highlighted here. And so what I think we'll probably get is a close above this downtrend. And then if I get my doodle tool, I think that we'll get a close here and then maybe something like that to then test 86,000. And then from there, maybe with some strength, do something like this. And so that is what I would be looking for with Bitcoin. But again, I'm not going too crazy. I do $5 daily buys and $10 dip buys at technical levels. And the next one that really stands out to me is 86, pumping the brakes on the chase. The last time I bought was 91,000, and the next time that I'll buy again, other than those $5 daily buys, is just going to be 86,000, and then I'll just kind of reassess because I don't want to go too heavy here because in case this is a falling knife and we do get into the 70s range, maybe 79, maybe 72, or maybe we get into the shaded box here, lots of support over here, but that could be coming down to as low as like in the 60s. So, I don't want to be going too crazy up here in case we do come down here. I want to be able to take advantage of those sales. But anyways, going to flip over to uranium, ticker symbol URA. This is the Global X Uranium ETF, which closed yesterday at a price of $25.66, being down about 0.5% on the day. And what was the low for the day? It was 25.26. I do have this alert here at $25. Also got this Fibonacci extension at 25.03. So really, that wick low from yesterday really just teasing me, but I'm not going to chase. I am not going after this. And also, I don't even necessarily want to get into URA. I just want to use this as kind of an indicator for when it's a good time to maybe look at other uranium or nuclear stocks. And, we're not there yet. When 25 goes off, then I'd start to consider it and then look for bullish patterns or bullish signals in some stocks. But really, the thing that gets me is this uptrending level that goes back to the low of August. I believe that's the low from August 5th. And then it looks like the close from September 6th. And then we do have like a confluence of levels over here, the 786 around 2450. And this yellow, it looks like parallel channel. Is that right? Parallel channel based on these 3 pivot points that you can see highlighted there. And so I just think that this could be coming down to sub 25. And so I want to be waiting for that to see or to consider getting into any uranium positions. And so thinking about that, I will just go over very briefly OKLO because I know that this is a pretty popular one. It was talked about, and this is one thing that I've recognized when people are, going on about stocks, how profitable they are, all that stuff. It's a topping signal. And it doesn't matter who those people are. They're bragging about it. They're probably taking profits. And then it's pulled back. And so the Bronx Viking has been, and also Colin Gladman, they've both been, talking about OKLO. But Colin Gladman yesterday, he's talked about closing a lot of his speculative positions. I believe he might be in this longer term. So this is not as speculative as some of the other ones. But anyways, I got a lot of lines drawn up here. I definitely do need to revisit this. But, I don't have any alerts over here. It does look like it's potentially coming down to the 50-day moving average. And so, while people are talking about getting out of a lot of speculative positions and not really talking about these stocks now, I think that's just a part of the, market cycles in that when things are really exciting, that's the time to not be paying attention to things or to forget about them and to be patient, to wait for the dip buys. And so I think, like a month from now, the Bronx Viking, as well as Colin Gladman, will be talking about this again, but it just needs to, find that bottom. And so I don't know if I finished my thought here. The 50-day moving average, that yellow line there, is at 32.88. We also have the 200-day moving average down here at 17. I don't think we're heading that low. But I do need to revisit some of these levels here, but that will be based on, that will be assessed once we do cross below 25, and today it might be the day. But the thing that I'm really excited about, I only got 3 minutes to talk about it, is SoundHound, which came down 8.5% yesterday, closing the day at a price of $9.43. And so, we do have earnings coming up on the 27th, so this is very risky. The 200-day moving average is just below us at $8.05. I do have this alert here at $8. I do think that this is heading lower, but with earnings coming up, don't necessarily want to be establishing a put position, but in looking over the unusual whales options data, I did find something that stood out to me, which I did post on X. And so from this post, I did put some follow-ups on this, but basically I just saw that, the net put premium spiked, and so I just want to go over that with you guys. I will be posting updates on this on X, and I'll also try to post a screenshot to the channel, but I am at work today, and this is really just based on looking through all of these tickers, whether they're positions that I hold or not, just kind of ones that I track. And so this is the only one that really stood out to me as being kind of unusual in looking at. So this is call and put premium, but what we see over here is this big spike in net put premium, and so that ended the day going up by $7.7 million, whereas net call premium in green there was more or less flat. And so this, really stood out to me as being kind of interesting. This spike in net put premium, since that did go up, that makes me think this is buying of puts. But if we see the volume here, I'll explore that over here so we can see it a little bit better. That is red, so that does suggest net selling. And so this is a learning opportunity for me. And so that's why I want to be following it. This spike in that net put premium makes me think that there's buying of puts, but this volume here makes me think that there's net selling. So maybe even though this went up, maybe that is represented by selling. I think that this could actually be not necessarily a bullish indicator, but a bottom signal. And then looking at the data over here, what we can see is this is from the $20 put that expires on April 17th, so 51 days to expiration, and we see this nice big green candle, and so that is on the ask side. That's in total for that candle. The volume was around 8,000 contracts, and so that because it's green, it makes me think it's more on the ask side. It's more likely a buy. However, the data over here, this red volume, makes me think it seems like there was more selling on the day. And then if I do expand this to just go back the past 45 days, I found that in looking up this contract, so just by clicking on this candle, I was able to look up the data for this. Not going to get into it, actually, how did I find that? I found that by looking at the data for SoundHound and then just looking up the... Don't want to get into it here. I just looked up the most premium traded on the date, which was this contract. Then I looked into this, looked into the data there, and saw the spike over here, which interestingly is also candle volume of around 8,000. This one's red though. What we can see is that the yellow went up. And so I was thinking that the stock price was going up, but that's actually the average fill for the premium. And so this makes me think that whoever established a position here, 8,000 contracts, they probably sold 8,000 contracts. So I will be looking for that to see if this number here changes. I'm just going to refresh this page. And so we don't, that's cool. So this is actually, they got out. So that's super, super cool. And so that is not a bearish signal, even though this spiked up. The volume over here, over here was negative. And then looking at this over the past, I can't go 45 days in the past, but looking at this, this does stand out. That's kind of unusual. This big spike here, I gotta get headed to work. And so anyways, the data here, this does suggest that it's bearish. However, what we see in the data over here is actually a net dropping of these puts, 7,000 getting out. So it looks like this person is probably holding on to 1,000 of those contracts just as kind of a gamble around earnings coming up. But yeah, I mean, I think that's just super cool. And so what I will do is I'm just going to do this, and then I'm just going to post this on to X, just so I don't have to do this again. And so save to clipboard. And somebody was exchanging with me about this, so I just kind of want to, let's see if I can. Looks like they were selling 7. Well, let's see. selling. So taking that risk off and profit before earnings. Oops. And yeah, so I'll just paste that there. And so that's pretty cool. And yeah. So I'm not highlighting that or anything, but I'll highlight it to you guys. It's the number there. The change is lower. So yeah, that's very cool, but I have to get headed to work. And, as always, though, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Take care, you guys. Be safe trading today. It's going to be a spicy one. Take care.